Man, oh man, what a day. What a move this afternoon. What a beautiful squeeze this afternoon. Market's ripping higher here right now. Boy, I know a lot of you guys made some pretty good money getting those bear traps on that move higher today. So well done on that. But now back to work tonight. Let's get refocused. We're only as good as our next trading day. And the good news is the big moves we saw today on the S&P and Nasdaq, these big moves give us an easy roadmap to make some money tomorrow. And as always in these videos, I'm going to cover my favorite trades in this video tonight. That way you have a game plan to make some money on Wednesday. Now, before we jump in and get the party going tonight, because this might be one of the most important videos of the week. We got Labor Day weekend coming up. Perfect timing to have some nice big moves here. Before we talk about my favorite trades though, make sure you subscribe to our channel that way you don't miss tomorrow night's video. And if you like these videos tonight, do me a favor, will ya? Hit that like button for me. Give me a shout out. Give me a holler down in the comment section below. Thank you so much for tuning in, supporting the channel. But enough of the intro here, Joe. Wednesday is not going to trade itself, right? Let's get ready for Wednesday. And with these big moves we saw, the roadmap is pretty easy here for tomorrow. Now, starting off on the 60-minute chart on the S&P and the Nasdaq. Remember, I like to start on the 60-minute. 60-minute chart helps me plan my trades for the following day. Later on in the video tonight, I'm going to drill down to some tick charts. Tick charts make it easier to time the perfect entries. Now, what do the 60-minute charts tell us right now? The 60-minute charts tell us two important things. One, we know direction, right? We definitely know these markets are fully bullish right now. 24 hours ago, we weren't quite convinced yet. Now we know the directional bias is overall bullish. We're looking to buy pullbacks, looking to buy the dips. The second more important clue on the 60-minute chart here tonight is the size of these moves. Anytime we see a big move like this, there are four simple ways to make money the following day. I'm going to go over those four different ways in a lot of detail tonight. That way you guys have a game plan to make some money on Wednesday before the holiday weekend coming up later on this week. Now, before we dive in though and drill down and talk about my favorite entries, those four ways to make money off these big moves, let's double check the calendar because there is a couple things you want to be aware of here for tomorrow. First things first, remember we're going into the end of the month. So end of the month, end of the summer, we do expect there to be an uptick in volatility. So be aware of volatility should be kicking up here the next 24 to 72 hours. Now, three things you want to be aware of here for tomorrow. First, overnight, we're going to hear from China. They'll be publishing their manufacturing data. I believe it's a PMI manufacturing numbers coming out just after midnight, sometime between midnight and 1 a.m. overnight. So if you're trading in London, if you're trading in Asia, just be aware of that. That Chinese manufacturing data coming out is a big wild card overnight, and it may produce some pretty big moves overnight. So be aware of that. Second thing you want to be aware of is the GDP report tomorrow morning. That is the first of three big news events we get Wednesday, Thursday, Friday this week to finish up the month of August. I always love it whenever we see a big news event early in the session. Can I get us going tomorrow morning in our trade room? So be aware of that. The third thing you want to be aware of is there'll be no video newsletter on Thursday evening. I'll be back tomorrow night, and of course I'll be with you guys in the trade room with all the members this week. Just be aware though, and give you guys a heads up, there'll be no video newsletter on Thursday night into Friday ahead of that Labor Day holiday weekend. So be aware of that. News overnight from China, the GDP number coming out at 8:30 Eastern time. And again, I'll be back tomorrow night. Don't you worry, but I want to give you guys a heads up ahead of time for Thursday night's video newsletter. Now, back to our charts though, right? Because let's face it, the money is made on the charts. Why don't we go over now my favorite trades here setting up here for tomorrow. We'll start first on the E-mini and the SPY, and we'll wrap tonight up on the Nasdaq and the QQQs. They're pretty much identical. Both the Nasdaq and the S&P are pretty much identical and can be pretty much interchangeable right now. Like I mentioned in the introduction, right now, the 60-minute chart, it makes our job pretty easy. We know we're bullish. We know we're are buying pullbacks right now. The big clue, though, is the size of this move. Let's drill down now and talk about this on the tick chart. Now, remember, tick charts make everything easier. Entry patterns are easier. Support and resistance is easier. Trade management, everything's easier. We use tick charts a lot in our trade room. This is a 7,000 tick chart. You can see listed up there in the upper left-hand corner. And if you're watching for the first time right now, that is the 21 EMA. It's not the only indicator we use in our trade room, but it's the most important one by far, right? Now that you know what you're looking at, though, what's the most important clue that we have on the tick charts right now? It's the sheer size of that move. Anytime we have a big move higher like this, we have to assume that buyers are not going to want to buy high. So the game plan is very simple. We're looking for a relatively deep pullback and a retest of that high. Now, there are 4 different ways we can trade this relatively deep pullback and a retest of the high. There are short trades on the way down. There are bear trap trades on the pullback. There are continuation trades going higher. And then we have potential reversal trades off the high or breakout trades going higher. As you can see, there's plenty of ways to make money whenever we see a big move like this. The most important thing you want to remember is after a big move like this, buyers are going to want to buy low. Buyers want to buy low. They want to buy at support levels. So let's talk about this, right? Now that you know the general idea behind it, deep pullback and a retest of that high, let's talk about during the pullback. Now, the market is pretty bullish right now. And so to short a top like this, we have to use a very specific type of reversal pattern. You guys are learning this in the free trading course. It's called a crown reversal. What I need to do is, if I'm going to short a market like this, I need to get the buyers trapped in trying to buy too high, right? So if I can get the buyers coming in and trying to buy once and trying to buy twice, what I can do is I can use what I call a crown reversal pattern to sell off this high, right? Again, think about it, right? We're way high up right now. Anybody buying right now is asking for trouble, right? So trap in the rookies, let them try a couple times, and then think about using their stops, right? Use their stops to fuel this move going back down in. Now, in my free trading classes, okay, we talk about 2 patterns, failures and traps, and this wraps together both of those 2 entry patterns. It's a 2-try failure, right, with a bull trap on the way back down, right? Again, if you've taken my free classes, you should know the components of that setup. Now, the next step is I want to get down at support levels, right? I have some support swings. I got my channel. The most important thing is I want you to notice how this market pulls back. It's called a 2-legged pullback. It's a 2-legged pullback. So what I want you to think about here is I want you to think about the size of that initial leg and then going lower from there. It's difficult for me to predict this right now, but in the free trading course, we talk about measured moves or ABCDs. Imagine now that's 1 leg and that's 2 leg, okay? This will usually go a little bit more than that 100% extension, right? A little bit more than what I call a measured move, right? So that's the general idea behind it. It's a bull trap for the short. And then again, think about this now being 1 leg, 2 leg. Think about where the 100% is, and it's usually going to be a little bit below that area, right? It'll ideally be somewhere down around the low of that channel, around prior highs, somewhere in this area. We'll know more about that tomorrow morning once we actually see what that pullback looks like. Then what you want to do is, remember, at least I'm not a very big fan of trying to pick bottoms, right? Because sometimes these pullbacks can be very, very sharp. So trying to pick the bottom is kind of a rookie mistake in my opinion. What I would rather do is I would rather wait for the pullback and then see if I can get sellers to come in and let them try to short this thing. Once those bears try to short this thing, bingo. Now we know where their exits are. Now we know where their pain is. These are one of those scenarios where everyone is a buyer down here, right? The buyers are buying low, and if I can get the bears trapped in below that moving average, I can use their stops to juice this thing back up to retest that high. Now, that's called a failure pattern, right? We trap the bears in below the 21 moving average at support. And again, remember the idea here, one leg, two leg, a little bit more than 100% extension. Now, on the way higher, where does the market want to go? That's easy. It wants to go back and retest that high, right? Now, as we're going higher, my concern is I don't want to buy what? I don't want to buy too high. And the way you get in on this to avoid that problem is with what's called a bear trap, okay? Trap pattern. Now, look at how this pattern sets up. It's a strong pop-up. It's a higher high in price, and that trap below that low. Strong move, higher high in price, trap below that low. These are three easy ways to trade this. It's that crown reversal off the high. It's that, again, it's a bear trap, but I call it a failure pattern below the moving average, right? And then as we're making our run back up to retest the high, that's the target. We then want to buy as low as we can and look for trap setup, strong move, higher high in price, trap below that low. Remember, I teach all of these entry patterns in a lot more detail in my free trading course, which reminds me, if you guys haven't taken that free class yet, if you're watching for the first time and haven't learned these entry tactics, what I'll do is I'll put a link up here for you in the upper right-hand corner. Grab that link, take that free trading course, because the strategy I teach in that short video series will teach you a simple trick we use every morning in our members trade room to know exactly where the best winning trades are going to be each day. I'll teach you my 4 favorite entry patterns to help you start making money. If you're not making consistent money right now, these markets are way too good not to be doing well. Grab that link, take that free course. It will change the way you look at these markets, and you might not think this job is too hard after you learn that roadmap. And also be aware too, I'll put all the important links, just in case you can't get that pop up there, I'll put all the important links you guys need down in the description of the video, right? So just be aware of that. All the good stuff will be down in the description here. So now you know more about how to buy it, right, on the pullback. Let's talk about some variations of this. And also, too, I want to talk about how to short this thing, right, off the high here, right? Because we can definitely look for that double top reversal here. One kind of variation I just want to point out here. Again, I'm anticipating that two-legged pullback. 2 things I want to cover here, and we'll go into more details on the reversal here. Now, again, I'd like to go in and trap these bears in and then run it back up here. These markets are wild into the end of the summer, right? End of the month, end of the week, end of the summer. If this happens to really get crushed and run down, all right? Again, remember, think about a measured move, right? We know kind of roughly where it should go, but it might not, right? We may easily see this market get crushed and run back down. If that happens, it's a small adjustment I want you to make. This will have a lot of what? A lot of bearish momentum on that pullback. So this is where what you'll do is you'll use what we call a 2-try variation of that failure, okay? Because that momentum is so strong during that pullback, think about now the bears trying once, the bears trying twice, and everything else is pretty much the same, right? We now going to use their stops as fuel to run that thing back up again. Same thing, back to retest the high. In fact, this is even a better opportunity for us, because now when those bears get trapped, when they get squeezed out of that reversal, remember, strong run up, we're anticipating a retest of that high. Even if it goes really sharp going lower here, so a very good chance here these bears will try a couple times and fail. And then remember, that's the failure. And then as we start going higher here, what's the game plan? Look for that bear trap getting in on the way back up. So a small variation, right? It's a small change, but it's an important change, because if it really shoots lower like that, which could easily happen end of the month, end of summer, right? Big news coming later this week, that could easily be on the radar for tomorrow. So kind of keep that variation in the back of your mind, and we'll talk more about that tomorrow morning in the morning trade room. Now, one more thing. We're expecting that pullback and that retest of the high. How do I sell that? Right? How do I sell it? How do I sell that double top reversal? Well, what's the problem? Remember, there's always a problem, right? You probably have heard me say before, there's no free lunch in trading. The problem will always be either location or momentum. All right. If I want to sell off this high right now, how is my location? Great. right? Double top, we're at resistance. Great place because everybody who's buying that dip, they're probably taking their profit, at least a good chunk of it, right back off at the retest of that high. So location, great. Fantastic location for a short. Love the idea, but momentum. Right? If we end up going all the way back to that high, yeah, momentum is not going to be good for what? For selling, right? A lot of bullish momentum. Now, we talked earlier about trying to pick a top can be difficult. So rather than trying to pick the top, what I'd rather do is let some buyers come in, let them try a couple times. Another one of those two try failure patterns. We mentioned a moment ago, right before we talked about move lower, 1, 2 for the bears, back up. This is the same idea here now, but for the buyers, right? So as we take out that high, who's buying up there? Who's buying that high? It ain't the professionals, right? It's not the big money traders, right? The big money traders, they're patient. Right? That's what makes them big money traders, right? They've learned to be patient and wait for the trades with some meat on the bone, right? These are rookies. These are FOMO traders, right? Small stops, small accounts. They can't protect themselves. They'll jump out of that trade as soon as they start seeing that thing go wrong on them, right? So once those rookies get in, then we look for, now remember, in a bull market like this, we need some sort of catalyst to turn this momentum over. All right. That's why I love using stops. Okay. Stops as fuel. Stops as fuel. On my gravestone someday, it'll say, man, the guy loved running stops, right? Stops as fuel is one of the easiest ways to make money, one of the most consistent ways to make money. So as the buyers get stopped out here, this becomes the fuel we need to run back down. These are really, really easy. The target is right back at the deepest part of that pullback. And then oftentimes, guys, this becomes, I can't go back far enough. Oftentimes, this becomes to try failure back to that low. Oftentimes, it becomes a big trading range. We roll back down. What do you do here? Trap the bears in. 1, 2, back up again, right? Overall bull market. Okay, so remember, think about this now. Big move up, buy the dip. Remember that two-legged pullback, trap the bears in, back to retest the high. Once I retest the high, do we see buyers chasing it? If we do, use their stops as fuel for that run back down where? The deepest part of that pullback. Once we take the deepest part of the pullback in, trap the bears in again, because now it becomes a bull market into a trading range, and we know from now, we know that ranges love to rotate back and forth. That is why I said whenever we see a big move higher, is a really easy game plan to make some money for tomorrow. Now, we might get all those patterns, we might get 1 or 2 of them, but now we have a game plan and ready for it. Now, I want to cover one more important variation, one more thing we have to be ready here for tomorrow, and that is a trading range. Sometimes when markets make these big moves like this, nobody dares to sell, right? It's so strong, nobody dares to sell. Nobody takes profit, right? Because they want to keep on riding this. And with nobody getting out, with nobody getting in short, oftentimes the market goes sideways. Now, ranges are by far the easiest way to trade these, but they do have some curveballs you got to be aware of. Let's cover that now on the Nasdaq. S&P, pretty easy game plan there. Let's go now over to the Nasdaq, right? Nasdaq is almost identical to the S&P. On the 60-minute chart right now, it's a nice strong bullish run higher. We know what direction is the best direction right now, and again, it's a very large move going higher, so we don't want to buy too high. The one thing I would definitely say about the Nasdaq is, you'll notice right away, we're basically right back at that big high I talked about in last night's video. So if there was a market that is more likely for that deep two-legged pullback, I would imagine this is it right here. I would imagine the Nasdaq is definitely on our radar for that because of that overhead resistance. But make no mistake, right? The strength of that move higher is by far the biggest clue, the most important clue that we have here right now. And look at this chart, right? A classic pop and grind moving higher. Now, everything I talked about on the S&P can be applied to the Nasdaq, right? It's that crown reversal off the high, that two-legged pullback off the high. We get down into areas of support, trap the bears in underneath the moving average on the way higher. It's that trap going higher, right? Remember all this talk about before? We trap the buyers in, 1, 2, back down, look at that low, and now this flushes out that big trading range. That's what should be on your mind tomorrow morning in our trade room. Now let's talk about, though, going sideways, right? Because again, we may not get anybody taking profit here. We may keep going higher, right? In all reality, right? Remember, if it keeps going higher, we're gonna follow that same game plan. All right. If it keeps on grinding higher, that's fine by me. We're not gonna chase it. We're gonna wait for that crown reversal, that two-legged pullback, right? Rinse and repeat. Now, let's talk about ranges, okay? Because ranges they're pretty straightforward, but you just want to be aware of a couple things when it comes to ranges here. Let's get this off of here, and let's put a little rectangle on here to kind of get this party going here right now. Now, when it comes to ranges act like magnets. And with a bull market into a trading range, it's pretty simple. All you want to do is find support levels underneath that trading range and trade the breakout back into that trading range. Okay, it's a very simple idea. Ranges act like magnets, and in a bullish move like this in a trading range, you want to find support levels below the trading range. In the free trading course, we talk about swing levels, range expansions, pendulum swings, expanding triangles, right? Triangle levels. There's a lot of things we talk about in the free trading course. So one of those levels underneath it, and then what oftentimes happens is we'll get what's called a pendulum swing. It'll go below the range and then back up above the range, and that becomes a big target. There are ways to make money on the pullback. There are ways to make money as it runs higher. There are ways to make money if it breaks out through that high. So let's talk about that right now. Okay, so now we know, again, just kind of anticipate there's a range here right now. If we get that range, we find our levels of support below us, it's very simple. Wait for that pullback. Don't chase the pullback. Don't trust the breakout. These breakouts, they always seem very convincing. Okay, always. They always seem like, oh, that's a real break. No, it's probably not. All right, it's probably not. All right. If you've taken my free classes, there are hundreds of examples in my free trading course about ranges. Never trust a breakout until it holds the pullback. Now, we break out lower. Again, that breakout will look very convincing. Okay, you'll go, oh, maybe this one. No, it's probably not. Okay, now, once it goes lower into support, we then wait for the bears to come in and take the bait. Right? We let those bears dig their own grave. We let those bears wrap that rope around their neck, whatever metaphor you want to use on this. And like I said before, right, we want to use stops as fuel, right? Because that's the easiest way to make money, right? It's better than trying to pick a bottom. Because we don't know, right? We don't know, right? Maybe that breakout goes way far down like that. And if it does, what do we do? If it's a strong breakdown, what do? We go 2 tries, right? We go 1, 2. Why? Because it's such a strong breakout, right? We talked about that a moment ago on the S&P, right? So if it's a really strong breakout going lower, then we let the bears try twice. We give them the benefit of the doubt. We trap them in. We run their stops, right, for fuel going higher. And then what do? As the market starts running back towards that trading range, we now look for what? What's the pattern on rotation? The pattern is a trap, right? It's my favorite pattern. It's always a trap, right? Off of that low. What I like to do is draw a trend line off those highs, bring it down off that low. And I like traps, but in all reality, this could be any one of the entry patterns. It could be a trap pattern, a failure pattern, a pullback combination. Probably not going to be a strength trade, right, as you guys learn in the free trading course, but definitely a trap or a failure off the low of that channel. So a deep pullback, right, a 2-try failure, squeeze those bears, right, make them pay for following for that bear trap, and then as we go higher, I'm grabbing that first test off the channel, I'm grabbing that bear trap, and then where's the target? The target is always easy. It's always back at the high of that range. And then again, the amount we go below the range is the amount we go above the range, and that becomes the runner. Now, one thing we know about end of the month, end of the summertime season is volume will probably dry up a bit over the next few days as we go into the summertime kind of holiday weekend here. So definitely to leave those runners for those pendulum swings. All right. Now, if you missed it earlier, right, if we go sideways here and we don't get a deep pullback, then of course it's just a breakdown, a failure, right? And on these ones, it's a failure, and it's so important now that we get that bear trap, that trap low, if you will, right off that low, because we don't want to buy too high, right? Trap the bears in off support. And then again, the amount would go below the range, amount would go above the range. What I usually do is take at least 3/4 of the trade off at that high, and then leave one last quarter, right on the runner. Okay, I usually go like, I usually go like a half off, right, 1-to-1, half off there, right, quarter off at the high of that range, and a quarter off, right, for that runner of the position, right, half off 1-to-1, quarter off. But you want to be at least the way I do it is I want at least 3/4 of that trade off by the time I retest the high of that trading range, and then leave a little piece of it, right, a quarter of the trade on for that run, for that pendulum swing going higher. All right, very, very easy game plan when it comes to a bull market into a trading range. One thing I do want to remind you about, and we talked about this, was it last night or a couple days ago? It all kind of blends together sometimes when you're a trader, doesn't it? One thing I want to make you aware of is a head fake. Okay, these are common. They're not going to happen every time, but what you want to be aware of is there's a very big difference between a pullback like this and a pullback like this. Okay. So, for example, if I see a pullback with a range like this, right, I can be pretty aggressive. Bears get in, they get trapped, and we buy into the stop losses. But however, right, in that same location, right, same exact location, if we end up going like this, up and then back like that, okay, it's the same location, right? Same location, amount above, amount below. It'll help you kind of time the perfect location for the area. But the point I want to make though is when it rotates off the high like this could easily happen tomorrow morning, just because again it's a big move higher. The buyers may try to punch it higher. They may get rejected going higher, may slingshot back down again. If it really starts to rip and run off that high and what we call pendulum swing off that high, remember when it's a very strong momentum down like this, what do? You let those bears try twice, right? Let them try once, let them try twice. And so again, it's a very small variation of it, right? Same, the rest of the same thing. We go up, right? Getting in off that bear trap. It's just the rest of it's all the same stuff, right? Target off at the high, target off at the high, leave the runner, like I mentioned before here. I just want you to be aware of this is common enough for me to talk about here tonight, but watch that head fake, that fake out breakout off the high. And if you got some guts, this is not my favorite trade, but if you go range bound like this and then punch up, how would you short it? Yeah, crown reversal, right? How does it work again? Remember, we got to get some fuel, right, to time the entry going lower, and that fuel is what? The stop losses, where we have to trap those buyers in and run their stops. Buyers once, go lower, buyers twice, and that bull trap right off the high. Again, put together a 2-try failure for the buyers with a bull trap, and you've got a recipe for a nice short off the high of that trading range. And again, the amount above, the amount below, right? At least a good chunk off below that trading range. Leave that runner right down to the pendulum swing on the opposite side. And then once we get there, now we're overall bullish, right? We're overall bullish in this example here. So we don't need that crown reversal at the low. All we need now is the bears to get trapped in here and use their stops as fuel to go back higher again. Ranges love to rotate back and forth, right? Back and forth. So that's some information, some food for thought for tomorrow if we have a breakout or a fake out breakout above those highs. All right, guys. Now we have a game plan. Remember, it's a rookie's mistake to make predictions. In the video tonight, we game plan. We go through different scenarios. That way, you have a game plan to make money no matter what the market gives us. Now, the game plan's ready. I'm sure tomorrow, end of the month, end of summer, holiday weekend coming up, big news on Friday. I'm sure the markets will find some ways to surprise us here tomorrow, but that's exactly what we have, our trade room. Every morning, we get together and we trade the plan we've outlined tonight on the video. I would love to have you there with me, trading right along, learning right along with us. I'll put all the information, all the trade room information, membership information. I would recommend first, start with the free trading classes, learn the basic strategy, get that, kind of get the wind at your back, get familiar with how that works. That will get you ready to sit down and trade with us in the morning trade room. If you have any questions or if you have trouble getting access to any of the material I've talked about here tonight, please don't be afraid to call the office or use live chat. Megan and I are always here to help answer questions, help you get in whatever questions you might have along the way. So don't be a stranger. In the meantime, though, hope you learned a lot in the video here tonight. Be careful overnight with that news coming out of China tomorrow morning. Big day tomorrow in our morning trade room. Hopefully, I will see you there soon. Hopefully, you learned a lot tonight, though, on the video, and you can use this information to earn a lot tomorrow as well. Guys, my name is Joseph. Thank you so much for tuning in. Thank you for watching all the way to the end. You are the person I do these videos for. So thank you so much for all the commitment and watching all the way to the end. Now get out of here. Enjoy the rest of your evening. Get a good night's sleep. I will see you tomorrow morning, hopefully sometime soon in the morning trade room. In the meantime, be well, be nice to each other out there, and you better be here next time. Adios, amigos. Bye-bye for now.